Good evening, all. I'm Epstein with your metal market wrap-up, and your wrap-up tonight is for Thursday, the 2nd of November, 2023. All right. Wow, we're at 5:50 p.m., and we had a melt-up in a number of markets, not the metals. The melt-up happened when you got to the stock indices. They took off to the upside. The notes and bonds were up very strong. But it was primarily a stock market day that just carried and kept carrying and kept carrying. I have been in the bull camp there, and I'll talk about that when we get to the financial update in terms of timing. In the metal markets, I keep saying, how many times are we going to discount the same identical news? I don't feel that I've made a mistake here. If you look at last night when I did my update and now, I think gold was about the same price that I did it then. Haven't changed my opinion. The market needs to consolidate this, and whatever the next event is going to be, it'll be. You know that we got Antony Blinken, our Secretary of State, is on a plane going to Israel now, trying to set up how do they get in more goods, in other words, food, water, and medicine into Gaza to get a pause. In other words, the fighting to stop or pause or don't fight in that area when they bring it in. They're not going to get Israel to stop. I know there's calls for that, but Israel's determined to go in and clean out the rascals. That's the name of the game that they're after. Whether they can succeed, I don't know. I saw some professors coming on today saying how this is exactly the wrong way to do it. Okay. But that's why they're professors, and then we have the army. So I don't know who's right and wrong, but they've been trying to do this for an awful long time, and it doesn't seem to work. So now they're resorting to the fact we'll corral it, we'll bomb the heck out of it, we'll go into the tunnels, and we'll get them all. That seems to be where you're at. Okay, gold's not moving on that. Gold will move only, as I told you yesterday. Iran's got to jump in. You got to get other Mideastern countries that they start lobbing shells and everything, and it gets to be 3-4 fronts against Israel. 3 probably. Not seeing that at this point in time. It's very, very quiet other than condemnation. When you take a look at the gold, you are up 0.25%. 1/5%, not even that, 1/5 right now of 1% for the week, and tomorrow's the last day of the week. So this rally that came up there did its thing, but now the market's sort of stalling, and I think it goes in with the thinking I'm telling you. Chart-wise, take the name of the chart off. Do yourself that favor if you want to learn. You look at this. What kind of action is that? Bullish, bearish, sideways? I'd call it sideways action, distribution. You've had a big rally, and now the market's just playing games back and forth. So now you got going home a bear signal. For the first time, you got lower highs, lower lows. Okay, that's bearish. It's fighting at the 200-day average. On the way up, I was telling traders, and I told it to my morning subscriber people as well, I don't think you buy the market here. I said, I always have trouble on the first move to a 200-day average that it just looks at it and goes, so long, and it just keeps going. Didn't really do that. It's been fighting the battle. If it wants to fall from big support, I think it comes in at 1970, which is the 18-day average, to 1950, 560. I don't see on that pattern any way to suddenly say, oh, I'm now bullish unless. Let me give you the unless. You look at today's range, you come down, you take out the low of yesterday, that is Thursday's low, then revert, get back over 1999.20, and away you go. Yesterday's low in the market was 1986.30. That's today, which is Thursday, but we're already looking at Friday's trade. So you get under that 1986.30, you turn around, you get over 1999, let's call it the 2000 level, you close higher. I get bullish again in terms of the chart action. What about momentum? Momentum you lost. Let me walk you to this and get back to where we belong. This is Wednesday's action. You were still embedded. On the close of business today, Thursday, you lost the bullish embedded reading. You got a reading under 79. In order to Now, get it bullish again, you have to do two things like I said. Ideally, outside day up, and then get up enough so that this red line tomorrow on Friday is back over the 20 level. It's going to be very difficult to do as it's now down to 74, but it can be done. So you're always leery. If you let go here, I'm going to argue that's where you're going to the downside. That's my guess. In the silver market versus the gold, gold is still stronger. We had a small break back, challenged and looked at that 18-day average of closes and turned right back in favor of the gold market. But in the silver, you've done what I'm talking about in gold to a degree. You got up to the 100-day average in this case here, but over here you got up by the 200, the 100, and the Bollinger Band, and now you've set back for the first time over the past 3 sessions to the 18-day average, and you're sitting tight. Could this market develop a bearish tinge? It certainly can. All you need do now is take out the lows of Thursday. And if that's taken out and you close under 2291, you'd have lower highs, lower low, and you'd open the door up for maybe getting here. But what would stop that, in your opinion? I know mine. You'd probably be very oversold. You're already under 30, so you're oversold now. So I could say, yeah, you might want to get down there, but I don't think I'd get too excited about that type of trade. In the copper, the resistance is ultra clear. It's the 18-day average of closes. Hasn't gone anywhere for a week. It keeps hitting those numbers, either side of it, and it's gotten itself very overbought. I'm not impressed. The first run up to that you hadn't done, the 100-day average in the Bollinger Band, stopped this market, and now your momentum is trying to clean itself up by dropping back and getting away from overbought. Now, in the dollar index, I have told you and repeatedly, you've gone from the upper band to the lower band, from this band to the upper band, went back to the 18-day average, didn't have any trend at all here. You still had a higher high, lower low. Yesterday, that's Wednesday, went up to the upper Bollinger Band and right back to the 18-day average today. I know you're going to tell me you know how to trade that. Sure you do. That is called impossible. Very difficult. It's more or less a market going sideways. But after this big of a rally, could this be a top in the making is what you have to ask yourself. And I tell you, it's got my attention. Is it a top? People, then you got to get a little nervous. Could it mean that U.S. interest rates don't have to go a lot higher because they're one of the things that drove this? I don't know. I'm wide open to listening to everything. We had a correction off the 5% level in the 10-year notes. As you know, you got up to 5%. You pulled back to 4, 6 and a fraction. I'm watching Bill Gross out of PIMCO. He's talking about the curve yield, and he's looking for it to do now what I am. I think the 210's going this way. It's about 33 points over right now, inverted. I think it's going back to traditional. If it goes back to traditional, I've got to tell you, that does not mean it's super bearish for things anymore. This is a market that just has to mull through a lot and then pick itself up. Do I think that a big recession is going to carry the stock market sharply lower? I'm not seeing it as long as labor holds up. So what do you do when you get these type of market activity action? I know what I tell clients. I tell them you go to this right here, the pivot points. You get a day like today, it sets up all kinds of action on the pivot points because you got an extreme. And the way the formula is going to come in, when the formula comes in, it looks at the range of Thursday. It's then going to give you the formula. You have it in your charting software. But what it'll do is you'll have a center line. You'll have 2 sell numbers, 2 buy numbers under the market. Traditionally, they're called S1, S2, R1, R2, resistance, support. That's how it's going. It's crazy, all right? I look at the market from my point of view. The traders are going to look to buy the breaks, get out up at the white line. They'll try to sell the rallies, like you saw here, trying to come out at the white line. The white line is what you're at. That's why it's called a pivot point. You're trying to be on either side of that. I created a free course for it. It's a video course. And you take a look at it. Your charting software probably does what this does. I use my version of slow stochastics in it, which is very different than your version. And I like mine a heck of a lot better because it smooths things out in a different way than yours does. And I get my signals either lasting a little longer, coming in a little shorter when you put momentum onto the pivot. How do you work with it? How do you get it? Because I want to give it to you. Go to iraepstein.com, free offers, move your cursor to the top here. You'll see an icon, give it a click, become a pivoter. I'm Ira. You have a good day.